Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report. I am Frank Ochoa, aka Pivot Boss, with your analysis for January 11th, 2016. Here's a look at the daily time frame of the ES. So far, overnight trading. Here's the previous week's low and close. You can see prices below that zone have been rejected in pre-market and overnight trading, and prices are now back higher at 1925s. We obviously had a significant sell-off in the prior week, the first of the year, which led to a significant drop back into 1900 evens off of obviously the 2035s, the 2040s. Now, what we're looking for here is how does this thing play out the rest of this week? If a retest back into 1910 is defended by bulls, look for a slow continuation back toward 1981s. That's the key level that was violated that opened up the recent decline. Any pullback into that zone could be seen as a selling opportunity by bears looking to defend for another wave of weakness ahead. Now, if we take a look at the monthly pivot range here, rather the weekly pivot range, the midpoint of that range is 1976. So if we bounce into 1976, that would be a midpoint retest of the previous week's range. If prices below the previous week's low are being rejected, it's a clear assumption that we could bounce as high as 1976 to begin the week. So we'll see how this thing plays out. But again, as long as price remains below 1981 and especially 1991, the odds favor further overall downside price discovery, at least in the near term. So we'll see how this continues to progress as we head into the rest of the week. Looking at crude oil, you can see crude oil had gotten the downside break from its narrow range. The break occurred through the previous month's low price of $35.35 and reached our first target and came close to reaching our second target of $31.28. Right now what we see is price playing between the previous week's low and previous week's close price in overnight trading. Above 33.16 opens up a retest back toward 34.80. I would say any bounce into that zone, this LVN, the CLVN right here, between 35 and 34.50, that's a zone where bears really want to defend for a continuation lower. Remember, the fact that price broke down below its key range here, 40.69, implies a continuation into the 100% expansion target, which we still have here at 28.91. So we could be looking at further overall downside price discovery into 28.91 over the course of the next couple of weeks. But right now, any bounces should be seen as a selling opportunity in the short term for continuation lower. All right, let's take a look at gold futures now. Here's gold futures. This is a daily time frame. The previous week, we saw expansion through the top of the range here, 1088s. I mentioned any pullback into 1088 is likely a buying opportunity for a continuation higher. We did have targets at 1112s and also 1130. We've already reached the first target. The secondary target will likely be reached should price continue to remain above this minor CLVN and the previous month's high. So again, any pullback into that zone offers a buying opportunity for a continuation higher. We are seeing kind of a stall on these highs right now. So if price does break down, expect bulls to defend. Otherwise, a failure to hold that zone would continue downward into the previous lows of 1045 with a failed range expansion. So very important to see how this thing plays out. I would say 1088s continue to be the pivot to watch. Lastly, let's take a look at the NQ. Here's the NQ in a daily time frame. What we mentioned before was any failure to hold above this 44.49 would open up a move into 43.11.5 with a shot to see 41.74s. Price easily pushed its way downward and saw the 42.26 key level in overnight trading, which is where that CLVN is. Very important zone there. Price bounced and is now holding back above the previous week's low. Very similar to the ES, this rejection of price levels below the previous week's low opens up a potential move back toward 4,400. If we bring up the current week's pivot range, you can see a midpoint move would be up to 44.31. So given this big move we've seen downward, any bounce could take us right back into 44.31 very easily and still be considered bearish, as bears would likely attempt to defend the bottom of the key range for another shot at weakness ahead. So we'll see how this plays out. We could see further near-term price movement back toward 4,400. But again, any bounce could be seen as a selling opportunity within the current downtrending market. All right, that's it for now. Let's see how these things play out heading into the rest of the week of trading. Good luck and trade well.